Hi, I'm Doug YYZ. I make Canadian personal finance videos and review videos on this YouTube channel. And in this one, I'm going to do an update of my dividend-focused tax-free savings account. I'll get right into the numbers and compare how my portfolio was looking back in July compared to August, and we're in September now. So a little bit of an update there, plus how much I've made in dividend income each of those months. Toward the end of this video, I want to share a disappointment with a stock pick that I made, but you'll have to wait till the end or you can skip ahead. I'm not going to tell you what to do. There's also a stock pick that was a total win. I'll also share that toward the end of the video. I've got the invest portfolio open up on my iPad here, and the last time that you saw the value of this portfolio was in July 5th specifically, and the value was $37,554, so a little over 2 months ago, and today the account is around $42,000. And I say around because the markets are open right now, and that means the value is going to be fluctuating as I record this video, hopefully in the upward direction. Dividends in July, we had a pretty good month. We made $187.69 in tax-free income. And in August, we dipped down a bit, but it's not going to be consistent every month because some of these stocks pay out quarterly where others pay monthly. So August, we had $127.04. It's nice. I'd like to see it closer to 200, but we'll get there soon. So far this year, we've made $1,036.85. If you average that out across the 12-month period, you're making $129 a month. 12-month period, that would come to $1,550. My strategy right now is to go for stocks and ETFs that have a higher yield, and that's going to pull up the average for some of those stocks with no yield or a lower yield. One thing I got to keep in mind is when you go for higher yields, there's usually more risk associated with it. Okay, so on the iPad, we're going to take a quick look at what the account looks like right now. So today, we're up right now $112. I'll just scroll through the portfolio so you can take a look. I realized I'd never shown you guys how I buy stocks on the Wealthsimple Trade app. It's really quite easy. So why don't we just do that right now? A quick little tutorial in the middle of this update video. So I'm going to talk about and buy HYLD, which is Hamilton Enhanced US Covered Call ETF. It has a high yield of over 13%. Now, it only says 7.8% in the Wealthsimple Trade app. That's because this is a new ETF. It just came out in February, so the statistics within the app are not correct. They're also not correct on Yahoo Finance. You have to actually go to the Hamilton website where they're gonna show you that it's actually 13% right now, above 13%. Yesterday, I just bought some of this and I spent more than $12.36. Here's the thing. You can hit buy on the app, and you can see I have available to me almost $180 in my tax-free savings account. The default setting is market buy. You don't want to choose that. Market buy is the app is going to pay whatever it believes the price for that stock is at the moment. That may not be the best price because Wealthsimple Trade does not always have the live price updated. So I'm going to show you what I do. So to get the live price of the stock, you want to pay what it's worth right now when you're buying it. You go to Yahoo Finance, you type in the ticker symbol. So for this one, it's HYLD.TO because we're trading on the Toronto Stock Exchange. And you can see that it's $12.35. Let's go back to the app. We choose limit buy, and you can see that the price that they have there is $12.36. It's not that different from the live price, which is $12.35, but we're still going to do limit buy because you never know. In the process of buying it, that might change and they might charge you more, up to 5% more than the live price. And then you pick however many you want to buy. So I want to spend pretty much that whole 180. So I can buy 14 of those. So you press buy, you confirm, and then we're waiting for it to go through. And probably before the end of this video, I'm gonna get the confirmation that that purchase went through. So why did I choose HYLD right now, and why have I been buying that a lot lately? I think it's a good ETF, not just because of that high yield, but also because of the diversification. If you look at what HYLD holds, it holds a lot of other ETFs. So you got to do a little bit of digging to figure out where's that high yield coming from. Some of the biggest ETFs that they hold, those ETFs are holding stocks like Facebook, Alphabet, a lot of the tech stocks, a lot of the big ones on the NASDAQ. Some of the other ETFs they hold, and this is where the diversification comes in, are like pharmaceutical companies and medical companies, which of course right now are really important. So HHL is one of the ETFs that it holds, and that holds AstraZeneca, which is a maker of one of the vaccines, and a lot of other pharmaceutical companies. I feel pretty safe with this one. It's a good balanced basket of stocks. I mentioned this at the beginning. We're going to talk a little bit about a disappointment that I've had recently with one of the stock picks that I talked about in my last videos, and I was really excited about it. The ticker for this one is INO-UN.TO. It is a real estate investment trust in Avalis. It had a super high yield. It was above 10% most of the time. However, in the last month, they slashed their dividends in half. So I'm gonna open up it in the app and show you that the average price I paid for this stock was $7.85. Now it's only $4.75. And what I mentioned before was the yield is showing 18% here. That's not accurate. It's because the app is not the greatest, but it's free, and so you got to kind of put up with things like that. But yeah, so going forward, that yield is going to be updated. It's going to go down quite a bit, even though the price has gone down. I'm a little bit afraid to put more money into this stock right now, so I'm just going to let it sit. I'm not going to panic sell. The company could change things around. They could buy more properties, and that yield could go right back up. So the total return it's showing for me, I lost about 40% on this one. Luckily, I didn't have that much invested in it. It just shows you with that higher yield, there's a little bit more risk. I also have some happier news, and I feel good about my beginner stock pick back from 2020 when I first started making these videos and first started investing. And the ticker for this one is SRU-UN. This is another real estate investment trust. It's called Smart Centers. The reason why I picked up on this one was because I can see it everywhere, and I like to know about companies before I invest in them. And Smart Centers, I've read about it a lot. What they do is they own a lot of property where it's like big box shopping stores, you know, the places where there's a huge parking lot and there's like a Walmart there or a Costco or something like that. You might see a sign that has 2 penguins on it or a family of penguins. They just became a dividend aristocrat. There's a bunch of criteria which makes a company a dividend aristocrat, but the one that's most important to us now when we're talking about it is that they've increased the dividend pretty consistently over the last 5-year period. Smart Centers just qualified as a dividend aristocrat earlier in September. Thinking back to when I didn't have hardly any knowledge of investing, I still am such a beginner. I didn't know what a balance sheet was. I didn't know how to look for those shareholder documents that kind of include some updates. I just did it by connecting the dots. These are essential stores. They're not going to close. No matter what happens, people need to get groceries, they need to get their essentials. These companies are going to continue paying their rent, which means Smart Centers can continue paying us the distributions. And hey, it turned out the yield is not crazy high. Right now it's saying that it's like 6.5%, and that's pretty good. And that's why recently, September 13th, I bought 10 more shares of this. Aristocrats are so good because by increasing the dividend or distribution every year, that's increasing that yield percentage that you paid on that original amount. It might be a little hard to follow, but say you bought a stock at $20 at a 6% yield, and then the year after they increase that dividend. So that yield isn't 6% anymore. It goes up to 8%, 9%, 10%, depending on how much they've increased it. And then the next year, they're going to increase it again. So what was originally just 6% yield on a stock could end up being 20% or even more the longer you hold it. It's just a great bargain. All right, so that's it for the updates on the portfolio. So my plan for this YouTube channel is to keep pumping out videos, keep giving content on what it's been like for me and my experience as a new beginner investor. I realized recently that YouTube is running ads before my videos or on the side of my videos, but I'm not getting a cut of the ad revenue for any of those things. And I know that I'm not the only one this is happening to. A lot of beginner creators, people with less than 1,000 subscribers, they're having ads run on their videos too. And it's fine. YouTube's providing a service for us. They're hosting our videos for free. But some of my videos have been hits, 18,000, over 1,000 views. I want a cut of that income. And it's not to be greedy. I want a cut of that to reinvest into the channel, either by putting that money into the TFSA, which I'm sharing, and I feel like we're on this investing journey together, but also for equipment and other things to make these videos better quality. And I'm sure my cut at this point would just be a few cents, but help me get there. If you're not subscribed, subscribe now. We're almost at 600 subscribers, and I want to push that to 1,000 so I can get a cut of YouTube's earnings and my fair share of that ad revenue. Also want to say that I appreciate all the comments and likes that you guys been leaving me. We've had some good discussions, and I've got some great recommendations from you guys in the comments. Maybe we'll do a video featuring some of the comments in the next one. Thanks for watching. I'm Doug YYZ, and I'll see you in the next video. Bye.